Goldman Sachs holding its first ever investor day at their headquarters today. Our Wilfred Frost there looking at why Goldman is doing this. Wilf?
Yes, Scott, well, we can use the words of Chairman and CEO David Solomon to answer that question of why. He said earlier today, quote, "We're taking real and significant steps to make Goldman Sachs more transparent and easier to understand." Transparency really the key, therefore, behind this first ever investor day for them. Why did they feel they needed more transparency? Two main reasons. The first one is there has been a shift in their business model, and the second, somewhat lackluster performance from them over the last couple of years, leading to some more questions that they wanted to answer today. And as well as some improved targets on return on equity, for example, up to 13% in the medium term, we've also got a breakdown of returns by segment for the first time ever. And what really stands out to me from that is best in class for investment banking, 18%. Pretty disappointing relative to peers for global markets, which of course is still 40% of their business, but they were clear they could get that to double digits quite quickly, despite whatever macro environment comes around, and still very, very low returns there in the consumer business at 3%, therefore being framed as things can only improve from here in that new part of the business. Now, despite some encouraging targets that they laid out today, the share price has slipped, currently down about 1%. The reason for that, though, is year-to-date outperformance, up about 4%, the bank's index down 1% year to date. We'll hear much more about all of these announcements later today as well. David Solomon will join us first on Closing Bell later today.
If I was to say, Wilf, yeah, I get it, but this is about Goldman being sick and tired of looking at its peers outperform its over the last 5 years at least in share price. That's what this is all about. They're sick and tired of it.
Yeah, I think that's a large part of it. Definitely, as I said, there's been some lackluster performance relative to peers, and that's best been displayed by the way that their price-to-book multiple, the multiple investors pay for their earnings, has fallen relative to peers and relative to their own history. And I think that's also the key part of today. Can they get back, not necessarily to their past peak multiple, but perhaps split the difference? And the focus there on those individual departments, they hope, will do that. 18% ROE for investment banking. If they get back to double digits for markets, then you're talking about 65% of the business having pretty solid returns and perhaps warranting a higher multiple than the lows that they got down to. But the easy jump in share price has been achieved over the last 2 or 3 months. And I think what investors are saying today is, yeah, we like what you've said, but now we've got to see you deliver on these new targets you've set yourself.